Right. Yeah, screen too. Right. Let's get going. Let's put these out the way.
Porque cada momento juntos es un
Funny stuff going on. Right. I've lost my mouse. Right, so pretty first of the month. So that's good. And well, monster day yesterday, which I guess we expected anyway, but it's always nice to see it comes alive. So today, quick headlines. Well, ATR on the FTSE's not changed. It's still down into 9. It's first of the month, so we've got some good trades first of the month. I just want to say from yesterday, we did the ASX yesterday and did some really good trades. I don't know about you guys, but kind of nearly about 9% for the day, which is really, really good. FTSE was a real good trade as well with the EOQs. So I'll endeavor today to get those videos. I'll upload them to the Learning Center anyway. It might be interesting for the guys on YouTube to see what the EOQ is all about and what we do. So that'd be interesting. NASDAQ and the US 500 yesterday, well, all-time record highs. And we're within roughly 1% of the Dow doing the same. Just put the edge up for today. What time we've got 54, so we've got loads of time. So get that up to. I think I'm going a little bit overboard on the edge now. Getting excited with too many trades, and I think I'll start cutting them down a little bit. Because I've got 9 today, but there are so many opportunities in the market. It's unbelievable. And I'll just turn those ding dong bells off. You guys might not be able to hear it here, but I've got guys coming in and out the room, and it's ding dong, ding dong. Wait, on, there we are. There we are. Turn the play off. No problem at all. Right. So risk on. And it's not surprising that the FTSE and the DAX didn't do very well yesterday because of the EOQ effect and the selling off. I did mention yesterday that we'll see the Dow, the NASDAQ, and the S&P all rise into Thanksgiving. Not Thanksgiving, what am I talking about? Independence Day. And then the market should start coming off. So it's done exactly what we said it would do on the CAN, and everything's obliged and sold off. We are still at risk on today. I won't go through all the highlights of the report. You've got the report, and maybe some of the guys on YouTube have got the report as well. If you haven't, you can get the report and the links below the YouTube channel, this live stream, and you can get this delivered to your door every single morning. So there's 5 buy recommendations today. The FTSE is going to be our top one today because it's the first of the month, and we're looking for that gap. So yesterday we hit the gap. We also hit the target. Plus we did the short very nicely indeed. And we'll talk about that. Today we're looking at entering the market. Quite difficult today because FCA regulatory requirements for pension fund money to go in, as you know. But I would like to close the gap first and then go flying up. But we might just have to go the opposite direction. S&P yesterday, all the targets were hit, which is really, really good. All going again. Well, all the targets hit. We missed by 0.068 of a pip. But if you were still had the appetite, and I pockets full of gold yesterday, if you still had the appetite, you would have had a really nice trade on the S&P as well. Euro Japani hit the targets again. Gold is back on the play as it's rising, and we'll look at gold. Recommendations, well, oil is still running in a consolidatory fashion, and we're still looking for breakdowns. USD Japani, well, absolutely smashed it yesterday, and we're looking for reversals again today. US Swiss, the same. Everything worked really nice, one-to-one risk rewards. USD CAD, I'm just putting some of these as an update, the ones that I prefer and updates because we continue the trading through. And 9 pages, I want to try and keep it to 6, but every single one's got an explanation of exactly why. And I know we're in the room, I know we're training in our room, and it's difficult to ask for people to have small accounts while they're learning. So it's not possible to trade online. I'm going to maybe have a look at this today, and I will cut down what I think are the very, very top high probability trades. And we'll just have 3 or 4, absolute max. And it's crazy having 9. But you get carried away with all the opportunities. It's like walking down an orchard full of ripe fruit. You can't help yourself but pick it all off the fence, off the tree. What am I talking about? So USD Swiss is one of them. You can see what we've got. I will let the market open. We'll let the market open. USD Swiss, we've done an early doors trade. We put it in the room this morning. Where are we at the moment? And that's a 2% trade looking for 22.22. And we'll talk about where the targets are and how to get to them in a minute. Just under 2 minutes to go. So we'll look at the FTSE. So you can see, right, okay. This is nice. So what we're looking for here, I've got all these targets, and we'll talk about the targets in a minute. Let's get down into 5 minutes. Now, that's yesterday's. We'll talk about that yesterday's EOQ trade. So today, closing that gap. If we can, ATR's 9 at 7. I'm going to go for 8 and 8 today, guys. 8 and 8. I've put some ideas in the room, but this market's probably going to go up. We want to see the first few minutes of trading. If we break out of here, then obviously we're going to go to the top side. But I would like to see this market come careering down. So 8 and 8, guys, short, and we're kind of we'd like to see this market come down first. So we're in at 87.69. Market's opened. If the market comes crashing down to close the gap, then great. But we are the first of the month, so regulatory requirements dictate that pension fund money goes into the markets on the first of the month. So we need to watch out. If we're going to break out of here, then we've got rid of pivot risk. The daily pivot's at 87.80, and then we can go on target 88.15 again. 88.15 from yesterday. That was hit. We missed by 0.6 of a pip on the US 500, but nicely done on the FTSE. So let's see what we can do. I want to see the first 3 things. First 5 minutes of action. Ideally, a break of this high here at 87.86. And the perfect storm would be a 5-minute fractal here. And then we'll take a frapper and we'll take this market up. Got a closing gap here, of course. So it would be quite nice to see the market come up towards, up into this resistance area. And then we can put an order in for the rest of the day, and the camera will break out long to close that gap, which would be quite a nice drop trade if we can get that. Hi guys, can you refrain from sending me loads of messages in the Slack room while we're online? Maybe come online and ask the questions online rather than what's happened? No live feed. Connection says it's excellent. Morning. I'm just checking. Is there anyone in the room that's on YouTube as well at the same time? Hi, Mickey.
I am, yeah, and it's okay.
All right, Mickey's gonna come up and said, yeah, Sorry, I shouldn't call him Mickey. Hi, Mike. Right, Ian Bot. Right, okay. Um, okay. Thanks, Paul. Don't worry. Right, so well, the first 5 minutes of action. I hope you got the targets yesterday, Mike, on the S&P. Absolutely smashed it. That was really, really good. So what we're doing here, we've got 2 minutes of action left to go on a 5 minute bar. If we can see this action broke out here, then we're going to go long into camera breakout long and head up towards this target. But the money's, you can see the unbalanced volume, OBV. Again, OBV9 is a bespoke indicator that you can get off my website. Right, we've got a 926 cross on the 5 minutes as well, and it's all above everything. So we've got 4 reasons now that we can trade this. We have to be patient, let the trades come to us. Never let the trades mark away. Hey, Mayor. Nice to see you here. Right. We'll go through the EOQ and how we got to nearly 10% profit yesterday. And we'll go through the ASX 200 shorts, the FTSE EOQs. Quite interested on the Dow. I had a little play. I did a wee go on the Dow, just ripped 16 pips out. Wasn't very good, but quite interestingly, the DAX has really performed on the EOQ as well. So alert triggered. We'll see. So we've got right. So alert triggered. We've two things we're going to do. We're either going to take a fracker break here, which would be quite nice. Alert triggered. Or a break under the fifth. So 11, we're going to do 12 pips, guys. 12 pips. Alert triggered. Take this break up. Alert triggered. Alert triggered. So let's have a look if we can get that focused in. We'll wind that up to the largest denomination, 8. We want to stop under the swing low that 5 minutes. We're going for a trade here. We can get rid of the gap short here. So a few things. I was hoping this is going to be a 5 minute fracker. We can put the 5 minute fractal tool on to show the fractal breakaway there, but you never take a fractal breakaway. So positions that we've missed: USD, USD Japani. What else am I in? What else are we in? USD Japani this morning. All right, I took a spot gold as well. We'll look at USD Japani and spot gold as well. We'll look at all. We'll go through all of them and have a good look. So, Alice, maybe you should come on at 7:50 and don't come on late. Sorry, I don't have a yeah. So the charts are quite. You can see that charts are. If you look at the top, Alice, just to give you a heads up, you can see where we are. We're in UKX, which is a FTSE. If you look at the, we're using pro real time, and then you can see at the top of pro real time, it tells you it's a bit of a watercolor here. It's not that strong, but in here it tells you exactly where we are. We're on the FTSE. Triggered. I'm just going to have a look at what alerts have gone off. Triggered, Euro Japani. Alert triggered. We might have to go and have a little look at Euro Japani. So we've been filled on the FTSE going long. What I'm going to do now is put an alert on camera breakout long. So what we've done a 5 minute bar here. Ideally, the 5 minute bar is, you can either take a direct break of that 5 minute bar above some resistance here. I think, did I mention? I didn't mention that in the report, did I? All right, if we break 8786, go along. And just for people who are not in here, 8786. Yep, So that's exactly what we've done. One of the, I wouldn't call it a trick, but one of the things that we can do in a 5-minute bar is got risking 1% is to put 0.5% on a break of the 5-minute bar and the other 0.5% on a Fibonacci on a retrace. So usually a 50% retrace level on that, and then add the other 0.5% on a retrace, because sometimes it does. The reason I've not done it today, can anyone remember in the room why I have not done that today, why I've gone for the direct break today?
Is it because pension money's coming in?
Absolutely dead right, yeah. The risk is we won't get a pullback, it'll just take off. So although you'd be risking half, you only be going for half. So it's not an absolute given it's going to work, but quite a high probability chance that it will do. I've put an alert into C-ball, and we'll see where we get to there. I've also put an alert into the daily pivot there. Excuse me, so we've tracked the price. Oh, right, okay, bear with me. I've forgotten to do their account, hang on. Bear with me 1 minute. Footsie. Right. Right, we're back. Okay, so this is where we are on the FTSE. I'll say that. So we're trapping the price. If the market comes back down to the daily pivot, which I do expect to get defended, there's a lot of pivot traders on the FTSE, so I do expect that to happen. I expect to see gold to have a resistance as well. So nothing to see. We are in the markets. Let's just have a quick look at the gold that we mentioned. So we'll zoom out. So the targets that we got a hit, which were 3,300, then we had 3,326. It's not 3,326, 3,260. I should get that right. The idea being that mentioned is, we talked about this yesterday, was that the market's going to come down into this resistance area here. I know before people ask, I am going to put out the support and resistance videos out for people using Heikin-Ashi candles. It's very precise. I'll try and get that out today. I've got some uncut stuff that I want to put out for people who want to see things like this, the live trading room, watching live trades with real live money. So I wanted to come down into this area, and we're looking for that bounce. And today, right, while I remember, guys, put your gold bots on.
Alert triggered.
If you've not put your gold bot on, get your gold bots on now. While I remember. So I'm going to put the, so I'm going to stick the gold box on. So yeah, bang. So I'm putting just one, I'm not putting relentless on, I'll leave that. But we've got the gold bot running now. Bonk, there we are, green cogs. And we'll let the bot take the strain as well for this market going on. So I took quite an aggressive stance. Yesterday, early doors, we took a long on gold on the futures market, which is
triggered
really, really well. So what we need to do is to get for trading in the today, we need to be out of. We need to break this area of resistance. I've got an alert trigger. We need to jump off here, and we need to do some risk management on USD Japani, guys. Did everyone get in on USD Japani this morning?
I did.
Right, so here we are. We're going down for 23, and we want to get 2% out of the market there. Just a wee push. It's just about done it, hasn't it? There we are. Boom, 2%. Well done, everyone who took the early bird trade. USD Japan for 2%. And we're going to absolutely bash its brains out today. That's going to be a market we can really rip some money out. So that's 2%. Just for the people that you remember, where are we? Live trades. I put that idea in this morning at 6 o'clock. So that was a trade at 6 o'clock while we're underwater. It was 23 at 2%. We'd smashed all the targets from yesterday, which was really, really nice. And it was just an obvious roll over and give it some coming back down into this level. I think put some other stuff in there as well. I haven't forgotten Euro. So we've got trading, early gap trading on US 500. And there's another one here, USD CAD, breaking the confluence there. So I'll just put that into here. Is Alan in it? Alan's not in the room, is he? No, right, okay. So we've got that under the belt at the moment. Let's go back to gold and I'll go back to the Forex in a minute. So we're 2% up. Zooming out for gold here.
Alert triggered.
This was a very,
Alert triggered.
very, very aggressive
Alert
trade.
triggered.
I didn't put it in. I did not put this trade in into the room. So it was a super aggressive trade, 5 pip stop with 2% risk. And we've got 7 pips up. So we're over 2% up.
Alert triggered.
Alert off again. Oh, well, we need to go and look at these. So USD Swissy stood ready to drop down. So USD Swiss is ready to break and let loose. So we need to go and look at that. It's difficult. If you've not been in the room before, it might be a bit chaotic. We look at lots of opportunities all the time, and if we can, we go and smash a lot of markets all at once, try and make a whole bunch of rupees, and then that's it, done for the day. So we've already made 2%. To stop the pressure from me on here, we need to break out here. I'm just going to take just a bit more than 2% out of there, but we won't count that in the room. That was me trading. And I know early doors, there's only kind of me, maybe Sam, and maybe Brian that do the early stuff, and Andy, but Andy's not here. So what we're looking at here, to really get this market rolling, we want a breakout of this oblique resistance, and that will be in the videos that I'm going to be putting out, the spot resistance videos. We do need this broken. Once we've broken out, we're going to open up 33.88 potentially today. But I'm going to put an alert on the breakout here. Then we can come back to gold, and we can be quite relaxed about that. Let's go back to the Forex, because there are obviously Forex things that are ready to go. USD Japan, it continues on. Am I running? I'm keeping right. So with some much bigger targets to go for, we'll talk about these. I think BRN's got to be an obvious next target, 14,300, big round numbers, and then 14,246. But we need to set up to get in again. Or that 15-minute bar, that reversal worked quite nice. So you could, if you want to, go into your frackers and do a fractal breakaway. As you can see here, there was a fractal breakaway there. Nice fractal breakaway, stop above here, fractal break there, market come down, and really you can just continue on in the next fractal breaks. And if you're going to trade anything today, if you've got to trade two things today, what would I trade? Well, we're already in the FTSE, so that's it's where it is. USD Japani and gold, probably. So USD Swiss, let's have a look. Bugger, that was the alert. So one of the things I wanted to go through. Hang on a second. I thought I'd put a trade on that. History. No. Right. So we have, you can see we're getting a little bit of consolidate. Let's take the fractals off. I can, before I do this, everyone, I can envisage everyone's eyes rolling because they know what I'm going to do now. Just want to point out something to you. Happens very regularly. When markets, let's have a look. When you see markets coming down and we're into a consolidation, 8 to 9 times out of 10, they will leave that consolidation area in the same way as they arrived. So you get the market coming down here, consolidating. Very high probability it's going to actually leave in the way it arrived. And if you don't believe me, pick any chart and any time frame, then come back to me and show me where it didn't work. So what I was wanting to do is to get a break of that consolidation there and to head down to this target today. So we are a bit late. The alerts have gone off. Let's go into the 15-minute and let's have a look. Did we get a nice 15-minute bar? Indecision bar, this is a fantastic 15-minute bar. 9 minutes to go. So we can trade this one live. We do have 9 minutes to go. So while we've got 9 minutes in the bag, we're going to use those 9 minutes to actually go and look at the other alerts that we had, which were Euro Japani, weren't there? Which was yesterday that we hit the targets very nicely indeed, going all the way up, 16,965. If I can pick the edge out, where is the edge? I'm saying we hit that target. It was Euro Japani yesterday. That was the Euro Japani yesterday. Yes, 6,965. So that was a target yesterday. Again, today, all we're doing is looking at buying the dips. Quite relaxed about this. Not super high probability trade. We're just playing the action. So what I'm going to do here, and you can do this as well, just using your alerts, just follow this market down and then put another alert into this area here. There. And we've got the price action.
Alert triggered.
And then what we're looking for is reversal on a 15-minute chart like this one. Perfect 15-minute bar there. If you haven't got the entry guide for the 15-minute bar, the perfect storm, then you can get that in the links below. And I noticed there's been one or two guys in the room getting the 15-minute bar guide, which if you look, let's put this up. If you look in your strategies and you look at the 15-minute reversal strategy, you don't need to download it because you've already got it. It's in the learning center. So there's the learning there. That's the daily edge. I'll get the right one up. There it is. There's your 15-minute bar set up. If you haven't got, if there are people on YouTube watching this, or maybe watching this later, whoops, this is the guide. Tells you how to, find a 15-minute bar. Shows you how to find a high probability entry system, the sequence of identifying the trend, how to get in on the trend, and it breaks it down right into noddy terms, structured guides on what to look for and why to look for it. And then it even offers the best candles to observe. This illustration is going long, flat bottoms, bodies with
Alert triggered.
Precision candles.
Alert triggered. Alert triggered. Alert triggered.
Let's go and have a look at the alerts.
Alert triggered.
Shouting at me again.
Alert triggered. Alert triggered.
Oh, that's a
Alert triggered.
FTSE coming back down and gold going up. Right.
Alert triggered.
So let's go and have a look at that FTSE. Is it
Alert triggered.
coming down to the pivot?
Alert triggered. Alert triggered.
Yes, it's coming down to this pivot.
Alert triggered. Alert triggered.
We've got gold on the slop sheet as well for going up. So you can see here what we should see. This is the fractals that you can see. So what we're going to do here, if we get stopped, was someone shouting something then? No. Yeah. Right. If we get stopped on this, because the market might be pushing down and wanting to go for that gap before it goes up, we didn't have a lot of money come into the market, as you can see just yet. But this is the retrace on the this 5 minute bar here, the opening 5 minute bar. So what we don't want to see is the bottom of this being broken. Now, a break of that 5 minute bar will put the market into a negative connotation there. So we don't want to see that one broken. If we do, then we will lose 1%, risking 1%. You can see here that we have not had the daily pivot defended. So we stopped out there. So that obviously bites into the profits that we've made. Nevertheless, we're still on. So where the market done a breakout, and it has produced a fractal. So that fractal break is still valid, going for 88.15. We do have a gap here, which is an issue. The risk is, well, there is no actually price action risk here for the market to close this gap once we're below that daily pivot. We've got the daily law and the law here from the EOQ sell-off last night. So we really do have an opportunity here. Are we going to be? Now, the reason I'm hesitating is the average true range today is 9, and we've got just about 9 on a break of that fractal there to close that gap. But we'd have to break that to close the gap. I'll just check it actually is 9. Yes, it's 9 today. So the gap's 9. So this was the quandary this morning when I wrote on the edge. You know, it can go up and it can go down because of, it can go up because there's a regulatory market function. Oh, hi, AJ. I haven't seen you for a while. Sent you an email last night. I don't know if you got it. Right, so Right, so the difficulty was, I think I put it on the edge. I think I did. Rot so much as, yeah, if it breaks up, then we're probably going for it. And if it breaks down, then we can go for the gap first. So it's a really tough call this morning. But if it's a tough call, it should not stop you for wanting to trade. If you're not in the market, you can't win it. So a breakaway today was looking quite good. A breakaway would only be confirmed on a breakout of Camarilla breakout long. That's an R4 cam pivot. It's a Camarilla breakout long. So when we get a breakout of a R4 level, and it is with the trend, and the price closes above the Camarilla breakout long, the market is liable to continue in the same direction. We never got that opportunity. And now we've got a hole in the market here to actually close. So whilst this is on here, we actually traded this levels yesterday. I mentioned this in the report yesterday, the EOQ report. So if you've got the EOQ report, oops, let's get some more data. You'll see it. So I was waiting for a 5-minute bar for it to 5 minutes at 4 o'clock. Oh, there we are. There it is. To sell the market, take the fractals off. So we're looking at a closing a 5-minute bar here to go short. And we traded that for a nice 2% yesterday. I did put it in the yesterday's EO edge. So if you read the edge yesterday and took the trade, it actually worked very nicely. And that's an EOQ trade. This is all over the place. I don't know whether to just put that 8 and 8 in that we had before, just in case the market does reverse and run for the gap. In fact, if it does come careering down, it's probably, let's have a look. If we did have that, we got stopped by 77. Well, what was that stop? I hate getting stopped by half a pip. 8776. And the market came down to 8776. Wow. That's just a little bit annoying. We got done by the spread. Just a bit annoying. If I'm going to lose, I prefer to lose by a really good margin. Not get stung by the spread. Not get stung by the spread. 876 was the stop. 8776 was where the market came down. So it just stopped me. What a pain in the ass that is. There, get back to the point. Right, so I think what we'll do, we'll take a break of that 8. So 4, a healthy break into that close, and we can use 13 pips, and we can use 13 and 9 we can use. 9 pip stop and ATR, 13 pip target into closing that gap. Now, this might not happen, but if you do not prepare, then you can't win it. You can't be in the market. So at 8774, sell into the close. That will get our 1% back and a little bit more to boot. So a 30 pip target, and we're going to risk 9 at 1%. That's a 1.44. So we've already got 2% on USD Japan. We've lost 1% on the FTSE, so we're 1% up. The next FTSE trade, ideally, we'll win going long anyway, but if we get at the closing gap, that's 1.44. We've got gold. Oh no, we didn't do gold, did we? That was me. I didn't show anybody else, so we're not going to count anything on gold. So we've got a fractal structure here. So there's a fractal structure there. That's a breakout fractal, and that is a bottom fractal. I'll turn it on. It will show you them. So they are just forming now. So we're in a nice fractal box here. So if the market breaks down, we'll trade that. And then we're very close to camera breakout long. So we'll have to be very careful watching this. But a breakout of 18, we'll just give that a bit of a wiggle at 87.90. And we'll have our stops at 16, which is 774. So the stopper, we're going to put these trades on. So this is, example. I've been asked, when do you put limit orders on or stop orders? Well, it depends how you want to trade, and this is a great example of when you put buy stops and sell stops in play, because we want to do different things. So if a fractal breaks out, we're going to go for that, and the larger target is 88.15. I suppose we could put that up to the larger target anyway, because that's what we will be going for. So that's got to be a fractal breakout. We've got an alert into camera breakout long, so we're alerted if that happens. I'm just going to put an alert at this level in case we're a breakdown, and we can watch this, then trigger, and hopefully watch it ride down into the close. So let's go over the trades that we've currently got. There are 9 trades. I'll just run through a couple. USD Japan is on a pullback. We've already smashed it for the first time. USD Swiss, we want to give it some. USD CAD, we want to give it some as well. Cable, great if it pulls back. Going long. Euro Japan, if it goes long. US 500 today long. Gold long. Quick look at gold. And we're going short on crude as well to break down on crude, I should say. We don't want crude to break down just yet. Well, if crude breaks down, it will help bring us down into the close, because the big constituent of the FTSE is in energy stocks, oil, gas, Shell, BP, to bring this down into the close, and that will certainly help it. So a quick look at crude, see if crude's coming down. Yes, it is, yeah. So if crude comes down, that will pull the FTSE down into the closing gap. So once you get the closing gap out of the way, we're confident going long from the closing gap. That would be nice. So if crude couldn't do that, so we'll look at crude at the moment. Yesterday we looked at crude, and we had that again. I did say, if I can get, does this marker pen work as well? Oh God, flip my heck, that's useless, isn't it?
Alert triggered.
Let's have that alert status. I'm going to put that on different screens so I can see it.
Alert triggered.
We have
Alert triggered.
So that's a FTSE coming down. So just a very quickie. We've got our orders in anyway. When the markets do come down, crashing down, and runs into a consolidative action pattern, it will generally leave the way it arrived, from the bottom, coming down along and out of the bottom. We've been waiting for a breakdown in this area since yesterday, and we've not had anything. FTSE's been triggered short. So I'll just put this into 15. This must be coming down. Yes, it is. So as this is coming down, it's helping that FTSE close the gap, because all these markets are correlated in different ways. So, right. So we've got this fractal breakout here using this structure as a stop. Now we've been taken out and triggered short of 8774, then that fractal's been negated because we will get a new fractal set up. So let's take that one off. And if the market's going to come to the top side, then we want to be alerted of a potential new setup just before it gets to this blue breakout area here. So what we're looking for now, we're going ATR stop above the last fractal. So this will draw a fractal here. You'll see a fractal bar there. That's the EMA line. You'll see a fractal bar set up here in 26 seconds. So, and this will potentially be a new fractal direct break coming down. So price action, momentum is positive, right? Because we're trading above the 4-hour and the 1-hour EMA and the 15. But price action is negative. That's negative because we are actually closing under the 9 EMA in the time frame that we're trading. So whatever time frame you are trading and using the 9 EMA, if price action is consistently above the 9 EMA, then the market is price positive. If you're under the 9 EMA, it's price negative, regardless if the momentum stays long or short with the trend. Ideally, you will always want to trade with the trend. The perfect storm is you want to have all your ducks aligned and trade everything short with the trend. The trend short, trade short, and the short final short is as you are trading under the 9 EMA as well. So we just need this to settle down and just ride down into that closing gap. And then we want to buy on a 15-minute bar reversal or a 5-minute fractal and target 88.15 for the day. If we zoom out while we're looking at this, if we stone this a little bit. So people often ask, how do we get some of these targets? And you can come up with all sorts of whiz-bang ways of
Alert triggered.
doing targets.
Alert
But
triggered.
the simple fact of the matter is a lot of these
Alert triggered.
markets, so I'm just going to get rid of these alerts again. Try and trade lots of markets together. You don't really need to. I'm just trying to demonstrate we can do commodities, Forex, indices, and if you use alerts and the like, you can follow them all. It's difficult to follow them all and show you all the trades while in a training and teaching room.
Alert triggered.
Streaming on YouTube at the same time, quite difficult. Euro, if you're a Euro Japan fan, then Euro Japan is now based, bottomed, and you'd be do okay. Looking for a reversal for USD Japan now. So I'm going to take that trade and hide it. I'm going to hide the pivots and get back to the point. Point being, people, you're saying, how do we get some of these targets? Well, you can get the targets by using price action. Look at the price action. Prices only go up or they go down. They don't do anything else. And they go in phases or waves. So you can call this a wave one or a phase one to that height. And that could be a phase one or wave two pullback. Now, it is a pullback because the trend is your friend and the trend is here. The 200 EMA, not moving average, not simple moving average rubbish. We are day traders. We want to see any indication moving quickly because we're trading quickly within the day. We're using 15-minute time frames, 1 hour, 5 minutes. If you're using simple moving averages, it's simply too slow for day trading. So to be effective, then we're looking for another way, another potential way. This is on the 4 hour potential wave one going through our targets. So if I take those off now, just to show you where I'm coming from, I'm using an extension tool. So we'll go from the bottom of the first wave to the pullback. And there are some things you need to hold to be true. If you're going to measure a data and do a forecast, you need to understand where your anchors are going to be. So these targets, as I open this up, these are Fibonacci extension targets. And what I'm saying here is, on the FTSE, we have a big phase wave up into the 88.15 break, which is 88.16 there. A pullback down, all the way back down into here. And what we're saying is, so long as that base is not broken, the chances of a phase wave of 88.15 are fairly strong because markets are pretty good at the moment. And we've had that nice impulsive move and not much of a pullback there. If we look at how big that pullback will be, so we can put a fib on that, and that pullback's roughly 15%. You expect a market, not necessarily given, however, on the FTSE, sometimes is a given, you will always get a 50% pullback, sometimes a 61.8. So it has done a nice pullback on the Fibo pullback. So we can use this as a base for an extension. So the extension is saying that a 50% extension is probably a given, like a 50% pullback is a given. And I'm talking about the personality of the markets. When you're trading, ideally, you don't need to know every single asset and how it all works. But if you get to know the personality of an asset that you are trading, it gives you the edge. And we're all about getting the edge in the market. Well, that's why we call the document I produce every day the daily edge, getting the edge. Again, if you want the edge, it's in the links below this video on my website. So it's about getting the edge in the market. So is this target viable? 88.15 again today. It is, so long as this isn't being broken. And a lot of things on trading do become self-fulfilling. What I mean by that is, if there are so many people, and we know there are, that are using Fibonacci sequences for trading, then if enough people are using Fibonacci sequences for trading, they'll be trading those sequences. So they will be self-fulfilling at 50, 61, 78.6. So our job as traders is understanding what other traders do, because we're not trading against the market, we're trading against other traders and their psychology and their thoughts and the way they actually think. And from those thoughts and their actions, the result is the market either moves up or it moves down. The market moving is only a result of people's actions or the people who coded the robots that trade. It all comes down to people and personalities and the way the market moves. So given that long verbose explanation, 88.50, so long as 8755 is not broken, is certainly onto the cards. And an extension, you could 61.8, yeah, quite highly probable. The next target I've got is 88.51, which is a 78.6. And the next target would be 88.78, which is a 100% phase wave. So what we're saying is this phase of running up, had a pullback, relax, and it's going to run again. Now, if at any point these Fibbo sequences break, then it's game off, and you've got to relook at how the market's moving again. Then, regardless of what we think, the market is always right. So can just put a little blip in the bottom there, I guess, which shows the 4 hour, quite an important level really here. Turn the cash pivots on. Again, if you trade in the markets and you don't have cash pivots on the indices, then you may as well go home. You're trading blind. You really do need to know where all the pivots in the market are, because the market does obey the pivots. And if you don't know where they are, then you're certainly at a loss. Now, we use Pro Real Time. The pivots are on my website as well. If you use Pro Real Time, they are not in TradingView, and I'm not going to code them for TradingView. I have no end of problems with people with TradingView not really understanding how to use it properly and buying the TradingView indicators and can't get them working. Believe me, they all work perfectly fine, but there is 1 or 2 people that will get them, don't understand the software, and can't load an indicator. And if you can't load an indicator and understand the indicator, you've got not much chance of being a trader either. So, if you're going to use some software, you need to know how to use it. Another long explanation: do not ask me for TradingView indicators. It's, I'm in a Formula 1 car with Pro Real Time. Why do you want me to drive a Mini using TradingView? That's just not going to happen. Right. Stop the waffle, put the trade back on, show the trade, I should say, and let's see what's happening in the price action. Diddly squat, nothing. So that tells me there might be the same kind of action happening with crude. So if we go on to crude and see if crude's hesitating or reversing. At the same time frame. Yes. It's come down that consolidative area, and it's done a low test, and it's coming back up again. So it looks like the FTSE is going to be a long painful grind today. So that in mind, it's been dragged around by crude because there is not a lot of economic. Let's have a look at not a lot of economic news on the FTSE. I don't think until a bit later. So if we look here, we've got unemployment change in the next 5 minutes for the DAX, and a whole load of CPI for the euro, which will affect the DAX. Bank of England, well, yeah, let's see what comes out at 2:30, but that's way over the horizon for us. ISM, PMI manufacturing, you do not want to be in the market when Powell is speaking today, or any of the PMI information, because it could be a little bit wild. And the jolts are quite interesting. It's now becoming quite a reasonably important heads up, the jolts data, but it has no bearing on how we're going to trade the markets that we trade in. And of course, non-farm payrolls is Thursday, massive trade for us on Thursday. We've won it for quite a lot of times. 5 out of 6, I think, this year, and we'll be doing that on Thursday again, because the non-farm is Thursday rather than the traditional Friday, because of Independence Day and the markets closing up. Although the markets don't close till 1 p.m. Most people take the day off, so the market's going to be really quiet. You can see here, crude, we do need a breakdown of crude. We do need this break down to get us interested in crude today. It's not really doing a lot. But with the market going up, you will see the FTSE doing the same, or halting its progression going down. So it's going to be a wee bit there, a wee bit of a battle. We do need to get the gap close. It's a market function to close the gap. where it's difficult for the gap to be closed when crude's going up. We need crude to come down to help the FTSE collide and drop down into the close here. So let's run back through rather than maybe jumping too quickly onto things. Let's go, we'll look at gold, and then we'll look at the different forex. So gold's doing a bit of a peekaboo here out of this resistance. Nothing yet to write home about. Just put some of the resistances in here. 3 points on a Fibon to give resistance, or a high test with a shoulder. That's what we use for resistance on Iconashes. We've got an alert here. Let's just put that a little bit higher up. The issue we've got here, of course, is the market breaking out of this oblique resistance line. This is going to potentially try and attract some bears for shorting and take it back down to this area. So what you really need here is on gold, I would say a 15-minute bar, body and wick, clearly trading above this line before we can say this line's been broken, and then the break of that body and wick. What I mean by that is if I can draw a line, excuse me, if I can draw I'll draw and see what we'll do. If I've got a candle here, and that's a body and wick, then what you want to see is a complete break of that body and wick going to the top side. So a full body and wick on a 15-minute bar. Let's get into that 15-minute. So it's might be an illustration, something that we can choose. So for instance, let's say if we're looking at the market coming down here, for instance, and you get a 15-minute bar, body it, so that's this line here, illustration. A 15-minute bar, body and wick above this resistance line, you would then take a break of that 15-minute bar, full body and wick above this resistance line will confirm the market price act. The market has accepted a breakout. The bears will stay away through the price action shown on Iconashes candle, because it will be green, it'll be positive, and it'll be breaking a new higher high. The issue we've got, of course, is this resistance level here. It's always a quandary. But if we can get a full 15-minute body and wick above there, then I would take along and I'd go for 33.88 target today. But do not be in the market without managing your risk and or making it risk-free this afternoon, because the US Powell will move the US markets with what he says at 2. So from 2:30 to 3 o'clock, you've either got to be out of the market or risk-free, because you just do not know what's going to be said or the figures that are going to be released, and you don't want to put your trades at risk. So that's gold. So let's just pull that down a little bit. So if something happens, then we're interested. So we've got no interest at all at the moment until we get some clarity over what's going to happen with gold. You can see these nice little phase waves. 1, 2, 1, 2, 1. And, you know, you can actually practice doing the extensions. You know, you can see where the market's probably going to run. Could easily run 100% in the 33.43. So if it does, then that'll be the 100% next Fibonacci phase wave completed. That's on our alert. Right, let's go to the Forex. Right, flipping heck, me talking. pain in the ass sometimes doing these live sessions because you miss all the opportunities for trading because you're too busy explaining all the trades. Anyone in the room, give this or are you anyone continuing to extend the USD Japani? No one? You know, we've made a couple of percent. There's no need to give it back. But it is on a breakaway. There's a I'll show you the fractals. Damn, while I've been speaking, there's another fractal breakaway. What I'm going to quickly do is check fractal structure because I'm
Alert triggered.
minded to put a stop above this fractal structure if it's been staying intact. It has, hasn't it? So what we're looking at here, if we measure from here, there's a fractal breakaway here, but we have a stop of 26.8. So we'll call that 27. The spread is just about 128, then plus 129. So we need roughly 29 pips stop, and our next target is 62. Am I interested in that for 1%? 29 for 62. Just looking now at the way the markets are moving, looking at the unbalanced volume. We've got more participants coming in and we're steadily keeping this one down. So yes, 29 and 62. If you can beat me to the trade, then please put the trade on if you think what I'm saying is reasonable. So there we are. We are adjusting that 46. While I've been talking, it's obviously moved. 46, and that slightly needs to be a little bit higher, of course. And pip's not going to make a blind bit of difference to blind manually galloping pony, is it? 30. If you could have that, please. Right. So we're in there now, and we're in again USD Japani. 29 pips, and it's a 61 pip target. So we're looking at 61. What is it? 30 pips, isn't it? So we're looking at just over, slightly over 2%, just call it 2. See if we can add another 2% to this. That would be nice. Maybe 1 minute. I need to trade that on the other account as well. Right, done. So USD Japani, we're in there. USD Swissy, or sterling, USD Swissy, US dollar, Swiss franc. Zoom right out. So you can see where we're coming from here. We've been trading this for a while, and the final destination. I put this in as a learning event, I think, yesterday. I think I did. I could easily be wrong. And we said we'd come back to it, didn't we? What's the USD Swiss? So I was showing you about support and resistance, wasn't I? So here we are, support and resistance. There's a robots trading and the normal trades, and we absolutely smashed this. So what I was showing you is how to get in on an oblique resistance level here with a stop above the swing high, but we're a bit late here because we did it live, and then I explained about moving the stop to entry and making sure that we made some more money. So if we can actually peel this back, so that's the trades 78, 89, 79, 798. I put this on two screens. So that, there we are. That's the trade there. So we took that trade and then we mullered that all the way down. I think, did I put an earlier one in? Just to demonstrate to you yesterday of how to do that particular one. So what's that? That's a footsie, wasn't it? Smashing the footsie coming down. Right, okay. Was this something earlier? There it is, the start of everything. So this was putting an order in on the market coming up into these levels, stops above the swing high, and then pushing down to 76. Yeah, so hopefully, there's the kind of evidence. A lot of people actually need, it's like everything. It's okay, someone telling you something, but you need to see it for yourself to believe it actually does work. So after all that drivel, the trades that we did, and the market came down, hit the targets, it took the targets off, and we need some new targets now, don't we? So zoom out. These fractal breaks. The thing is, there's all sorts of things that you can trade and trade them well. You don't need to be in every single thing. 4-hour frackers, zoom. So 78.30 is our next big target. Ideally, we want some pullbacks. This market's the dollar's on the floor. So if I pull up the Dixie now and overlay the Dixie here, you should be able to see what I'm talking about. So if I put a dollar basket up here, DX, we should see a dollar basket coming down. So there we go. So there's a dollar basket tracking down here, and it's tracking near enough, pitch perfect, coming down. So dollars on the floor. I'm just going to look at the heat map, the heat wave. So on the Geiger counter, we have the dollar at 6 at the moment, and the USD and Japan at 5.4. So there's a wee battle going on at the moment for strength. We may see that. Yes, there we are, green bars. So there is a wee battle going on spec.
Triggered.
So that gives us the opportunity for a fractal break, because the dollar will probably lose out.
Alert triggered.
So let's get rid of the Dixie. But before we do that, we do need to have a target. So let's zoom right out. There it is. It's the 78.30. Let's have a look at how that compares.
Footsie's on the move, Steve.
Right. Okay. In what direction, Paul?
Down.
Oh, right. Okay. We'll go and have a little look at it then, because we need to come. We'll do an overlay of crude. just to demonstrate. So FTSE is eventually going to give it up by the look of it. So we can do it. We're 1% up now. Stop to entry, guys. Manage your risk. I'm just going to see if we can do. Thanks for that, Paul. Running all over the place. It's hard to actually keep an eye on all the charts at once. If we put crude up here, that's an overlay on the same time frame. Oh, it's too big up. Quite interesting, this, isn't it? Look at that. Crude is going up and the FTSE is still trying to come down. So that's really positive. Tells me the market makers are right behind this. So it's highly likely to close that gap now. Let's see that action. If you want to, you can walk the dog with your profits. So what you can do now, you could put this at 4.5. Rather than, you can walk the dog, I just say, right, I'm going to lock in 0.5%. We're down 1%, don't forget, on the FTSE. And if we lock in half here, that makes us just down by 0.5% on the FTSE, with 2% up on the US Japan. If we can get this, then we'll be 0.44% up on the FTSE and 2% up on the Japan, which makes us 2.44 up for the day. Don't forget, 2% target for the week. And we're in USD Japan again, and it's making money again. So let's just stay on this. So Euro, you know, I am keen on USD CAD as well. I'm still in USD CAD from yesterday, and I'm just letting it run and run and run until it tells me it's finished. I was hoping to have USD Swiss run, but unfortunately, it hit the either target too shallow, and it took all the profit this morning. While we're waiting, has anyone got any questions, either in the room or on YouTube? I'm either crap at presenting or everyone just understands everything I'm talking about. Right, let's lock in that 9 now, because we want to be guaranteed no loss. IG will not let us do it. We have a tendency of that, but we're going to hit that target anyway, I think. You are joking me. We're not going to
triggered.
Do another double KSI. 61. What did that come down to? 60 point off. Surely not. Surely not. Don't call me Shirley. All right. Look at that. Bloody IG. It will not let me come down. Bloody brokers. We'll give you all sorts of excuses as well and why you couldn't do it. So, but we won't let this go less than 9 now. Come on, this next one should just push us through to 1.44. There we are. 1.44 win. So on balance now, we're 2.44% up. Not including the gold. So what we need to be thinking about now is the contrary view. 2 things we can do very quickly. We can think about putting a call option on, and we can think about also market going long, and we're looking for our excuse me, we're looking for our base not to be broken out with it. Don't forget, our base was there for our Fibonacci expansion. Now we can do a rise trade out of here a few things that we can do. We can do a rise trade, or we can look for a call option because it's early in the morning. So let's look at very simple calls. And what we're doing here is we're putting an option in play. If I can pull this across, we're going to put an option in play. Not because we're looking at implied volatility, nothing clever. We are wanting to put a trade long without a stop. Our stop is time. If we think the FTSE is going to recover, then we can look at putting a call option in and trading a call option. So call option for the day. So we're looking at 88.15 being hit now. These are obviously IG's view on where I think the market is going to go. They're saying at the moment, there is not a hope in hell of the market closing today above 88.15, but that's only a high target. So one of the things we can do, we like to trade this above around about 25 for going up for 78.47. So 78.47, the market staying above it is kind of on balance there. Implied volatility 13. We could actually get the catch IG on the back foot. Just come up to the daily pivot would be nice. Trading above it. I mean, what I'm talking about is trying to earn quite a lot of money. 87.80, 87.80, they're 5. Now, don't forget, you're looking at a profile 20 to 25 pounds on here. So check here. And you're putting contracts into roughly around your profile. And what we're looking for here is just having a little wee look where we are at the moment. 25. So, right, if you want to buy this, guys, with me, the price is already coming back up. 4 contracts, we're looking at spending £25 for £100 return. Not bad if you can do that on whatever ratio you're trading, but this is based on your 2K trading accounts. So smash the button now if you want. I'm going to smash the button now. Deal confirmed. And we're looking for a 4x return, 400% return on that. And we'll review that later. So we're in the FTSE going along. We're looking for the market to head up to the daily pivot and above. If we get up to around about the daily pivot, then we're going to be up 4x. If we get to our target at 88.15 before the close today, then you're going to absolutely smash it. You're going to make 8 to 9x on your money. So really good. So catching the broker with his pants down is always a nice thing to do. Actually, I shouldn't say that, should I? Because there's some IG people that watch this. Hi, Luke, by the way, if you're watching this now or probably later. Right, so we can do a rise trade here as well. So we can do a rise trade. Do we need it? We've got 2.44 in the bank, and we're looking to add another 6 to 8% on that later. Do we need to do it? We don't really need to do it. So what you could do is be quite relaxed. And rather than do a rise trade, what I mean by a rise trade is, as the market's coming down, what we're looking at is potentially having an order in above the current price at the close. And we'll put a stop under the spring low, and we look for the market to run back up, click the close, and continue to rise coming back up because the market is positive. We don't really need to do that. We've earned our money. Is the market going to continue to come down? Well, unbalanced volume at 5 minutes and the filter are saying short at the moment. So we put our puts in, but our puts at 6.4 to 7.1 now. So we're starting to head in now, puts our calls. We're starting to head in the right direction quite nicely. Although I could have sold a call. Doesn't matter. Doesn't matter. We're okay. You can see from the structure here, there could be a cheeky long here actually. This has been right. Okay, so I did mention before, when bottoms are broken, Fibbo targets need to be revised. Bottoms have been broken, so we'll use this as a learning point. Just have a look at the other trades here. See it. So USD Japan is up.
Alert triggered.
Spot gold's up. Why is spot gold up?
Alert triggered.
I'll just have a quick look at spot gold. I don't know what's going on. I didn't think I traded it. I didn't think we did trade it. Ah, the robots traded it. Right. So the gold robots jumped in. That's fine. Let the bot take this run. And if the market runs up, then that'll be fine. So back to the FTSE. What time have we got now? Don't want to bore you too long for too much. Right, so we've got a new structure here because that has been broken. So let's wind out and have a look how that looks now on the 4 hour. As we did these on the 4 hour. So
Alert triggered.
what's triggering?
Alert triggered.
Oh, it's USD CAD flipping heck. We've missed that trader. Oh no, we haven't. I'm carry on running that one down, so that's absolutely fine. We might not have done it in the room. I'm not sure. We'll have a look. So this was if you remember this morning, we looked at a phase wave down to here. But now we've got a lower point. And we can use this on a lower point because in cash hours, the market hasn't. So that's last night. So this is still a valid bar to actually use. So we can now use a valid bar, but a bit lower. What I'm saying is we need, if we're going to do this pullback, we want to make sure that the market is not negated through a candle in cash hours breaking some structure, and it hasn't. So we've got a 50% chance of 88.11 being hit on a Fibbo. So that's okay. I'm quite happy with 88.15 again, although the brokers think it's not a hope in hell. Let's see who's right. And then the 70, so the retrace level needs to be adjusted slightly. So I'll click on here and we'll pull that down to just below the 78.6. So we're actually using Fibonacci structures just to keep on, and we constantly adjust them because we've got to adjust to what the market is doing, not what we think. So there, we've got now a readjustment on our new law. So I would say we've already got calls in to trade this, so that's fine. If we'd done a rise trade, which is a rise up from the close with a stop under the swing low, which would be call that 52 minus 250. It'd have to be 50, which would be there, which is on the case. So that would be the rise trade. And if we've done the rise trade, which we have not, the rise trade would be in the money at the moment. What I would suggest you do if you want to keep all your money and add to your money is to use the 15-minute bar. You do not need the 15-minute bar above the 15-minute EMA for the purposes of this, because we have come down to some key areas, key area of reversal here. So that gives you that extra strength. So this is a 415 reversal. The 15-minute bar entry guide is only a guide for beginners. Once you know how to use the 15-minute bar, you do not need that to adhere to the rules of that. But if you do adhere to the rules, then you'll do really, really well, because you've got a belts and braces powerful entry criteria. So 15-minute bar, I would say now, but we've got call options, so we just don't need to do them. Bear with me 1 minute. I'm just going to adjust something that I can spot on the other account. See you in a minute. Okay, so let's go back to the Swissy. Kind of running out of time now, but let's go to the Swissy. Come on. So obviously I missed. Anyone in the room get this? The 15-minute bar break there. That was the 15-minute bar we were looking for there. There's no harm in taking that now, so long as we can get a one-to-one risk reward. Stops would have to be above here. Let's measure that. I'm going to put this trade on 26, call it 27, 28, 29, 30 pips of a stop. And you can just go for a one-to-one risk reward on this. I'm sure that will fit within the structure. Let's just check. Yeah, well, yes, I'm going to smash the button now, guys. Got a trade before me, press the button now. So I'm going to trade this now. I'll use the structure there for an alert for one-to-one, decide how long it takes to get down there. But then I'm just going to leave this open, and I'm going to run this down to my target. That's in the edge. Yeah. So we're looking for over 2% again with USD Swiss again, USD Swiss 7902, 7902, 1372. So we're up 2.44, which is very nice indeed. We're in. I'm going to leave CAD alone. We've got enough in there. Oh, we've already got CAD set up on that break. So CAD's already in. and we're going for over 2% on USD CAD and USD Japani. We're in USD Japani as well. And well, if all these trades come off, 2468 plus 2, 10.44 plus 4 on the FTSE, 14% there. Could be an absolute monster day again. But there you go. And it's nothing that we're telling porcupines on. It's all live. You've seen exactly what we do. That's just for people on YouTube who don't believe what a live trading room can do. But yeah, we do this every single day. You'll get sick of listening to my voice. So USD Swiss, we're in, we're making money. We've got a call option in, and that's now coming up quite nicely indeed on FTSE, looking for a 15-minute bar. We're in spot gold. Oh no, I can't count spot gold. Mid 2% this morning, but can't count that. And the robots are working. We're in USD Japan and USD CAD. And that's enough. There is the US 500 to go today along, but I'm kind of minded to leave that beast alone. Let it get to 7 o'clock UK time frame and look for a 15-minute bar reversal going long on the US 500. And you won't go too wrong on that. The reason I say wait till 7 o'clock this evening is because we have got the PMI figures all quite disruptive, all quite overcooked. We've got holes everywhere, closing gaps, extreme gaps. The market could come tumbling off. The targets that we set yesterday have all been smashed. Well, all been smashed. I'm saying all been smashed. It come within a midges what's it yesterday, but there's a closing gap to get hit. If you want a closing gap, ATR on the US 500 is 8. So you've got an ATR run if you want to do the US 500, but I think I'd wait. I think I'd wait till we've made enough money. We're actually banked money at 244. So any questions before I go, guys? If not, I will see everybody hopefully on YouTube on Tuesday morning for another live session on ripping rupees out the market. Anyone in the trading room, you got any questions?
No, all good, thanks.
All right, everyone. Yep. Okay, okay. Right. All right then. I'll see everyone again. See you guys.
Cheers.
And I will see you all tomorrow.
Cheers, bye.
Thank you.
Bye.